Hold on.
No, it's launched, Jake. I can't, hold on.
What?
Hello, everybody. Just waiting for people to get on. Great, people are logging on. Hope to get started just 1 or 2 minutes after 11:30 so we can be on as on time as possible. I hope everybody has some plans after this to at least enjoy the weather, right?
No, it's gorgeous out today.
I don't, but everybody else does.
You're looking out the window.
Okay, we're gonna give it 2 minutes and then we're gonna start. All right, 1 more minute and then we're gonna get started. Still waiting for quite a few people to join, but it's okay. All right. Well, we're just gonna get going. People can hop in. I'm Erin. I'm one of the owners of Straight Line. Jake, my husband, is the other owner. He's the one drinking coffee. Amber's on here. She's our director of operations, and we have the rest of our team here to listen in and hopefully help out. Today, we're gonna go over the PPP loan forgiveness, mainly the application that came out. We're not gonna go over how to step-by-step fill out the application. We're gonna go over what is included with the application and basically how to apply for forgiveness and steps maybe you can take now, even if you're partway through the loan, the covered period, make some changes or get prepared for the actual forgiveness. Next week on Friday, the 29th, we're actually going to be hosting another webinar, same time, 11:30, a step-by-step walkthrough of the PPP loan forgiveness application. So we'll have that link available. I'm going to turn off chat because I get distracted really easily. We'll have that link available at the end of the webinar, but so we will walk you through very exciting time of walking through 11 pages of PPP application. So that's next Friday, 29th at 11:30. So I will just get this going now. Bear with me.
Let's go.
1 second. This never works out the way I want it, so I'm always messing around with it. Alrighty. So Again, it's going to PPP loan forgiveness. I'm Erin Andrews, and Straight Line provide accounting services to small and mid-sized businesses. And through this entire crisis cluster, I don't know what you call it, we've been here as a resource for small businesses and trying to do whatever we can to help the small businesses, the small business community survive through this and then hopefully thrive after. So housekeeping, all questions should be asked in the Q&A section. I have disabled the chat feature. So if you do have questions, we will try to answer them throughout the webinar the best that we can. I do get kind of distracted. I think it is nice to break it up with the questions, but we will have an open forum portion at the end. We'll unmute you. You can raise your hand. We will have the slides available and additional content after this. We will email you, and we'll also have this recording saved as well per our other webinars that we've done. Also, I just wanted to put this in there. Please check your spam or junk filters and be sure to add the domain at straightline.com to your safe senders list. We've had a lot of people tell us they don't get our emails, and even my Outlook puts it in a junk folder a lot for some reason. So be sure to add it to the safe senders list because we do send out very important information. Obviously the follow-up to this, but throughout this entire period that you don't want to miss. Also, you can join our Facebook group, Straight Line's Business Owner Survival Guide. We've been putting stuff on there. We were kind of quiet for a couple weeks, but hope to be a lot more active on there while we were sort of hitting a lull with this, but the lull is over. So, as usual, this is not intended to be legal advice and should not be relied as such. You should contact your professional and talk directly about your business concerns. You can ask questions, but unfortunately we can't really answer things directly related to your personal business. So if you do have questions, you have to set up a time with us. We do offer consultation. If you've already taken advantage of our free consultation, we've been kind of flexible with that. We've done a couple free consultations with people, but at this time we will ask that people start signing engagement letters and retain us for services. But if you haven't done any free consultations, we are available. But for the most part, if you have questions directly related to your business, please ask a professional directly. So quick agenda, we're going to go a general overview of the PPP, obviously the PPP loan forgiveness, what we know now, potential changes, and also what are your plans after? So hopefully by now you all know this, the highlights of this program was designed to keep America working. So it was almost like an unemployment system done through the employers. So to keep people off of the quote unquote unemployment. I don't know if it's worked out that way, the way they intended, but that's what it was intended for. It gives funds to the employers to keep employees paid during this crisis. The loans are up to 250% of average monthly payroll costs, to a max of $10 million. That was based on a look back period. We will not go through the PPP loan application process at all, but if you have questions about that, we have prior webinars and materials on that. It can be 100% forgiven if spent within the following 8 weeks on specific costs. And for employers and businesses with 500 or fewer employees, including self-employed and contractors. And so there are other ways to qualify for more than 500 employees, but I don't think that's anybody here today. Also, if you haven't applied for the PPP loan and you're still considering it, funds are still available, so you can contact the bank today. If you do need help on what banks to contact, please let us know. We do have some great relationships with small local banks that have been a lot better than the bigger banks, and they are taking on some new clients, new customers right now, regardless if you are an existing customer or not, and they have been pushing them through very quickly. So if you do want to get the PPP loan, it is still available. So I just wanted to go over just quickly the PPP loan data as of, I think this is as of yesterday. So more than $510 billion in PPP funds have been provided to approximately 4.3 million small employers across the country. Nearly, I don't know what they define as small employers, but obviously, you know, they were given out to much larger employers, but that I think the second round of funding was a lot different. Nearly 2/3 of all PPP loans were for $50,000 or less, which I think is the average small business right now, especially the ones that we deal with. The average size PPP loan is just $118,000, which suggests an average size of about 10 employees. Again, that's fairly average, and honestly, sometimes that's on the larger size for some of our small business clients. Unfortunately, and this was our fear in the when a few weeks ago we did the forgiveness webinar, we were afraid that not all the PPP loans will be forgiven. And some experts are estimating about 50% of the PPP loans won't be forgiven. This is why we have been pushing to, forecast, plan it correctly. Don't just try to do it on your own. It's not some simple thing that you could be expected to understand on your own. Unfortunately. Sorry, again, I'm getting distracted by the chat, which I need to turn off. Okay. So again, we still believe that drastic changes to the current PPP loan forgiveness guidelines and interim final rules are necessary. I just heard about an hour ago that the SBA we believe intends on issuing more guidance later this afternoon. I like how they do it on Friday afternoons. It's really nice of them. And then really there hasn't been a lot of clarity or guidance on the current rules, which is really fun, especially since a lot of people are 5-6 weeks in. All right. So the Paycheck Protection Program, there are 3 calculations relevant to the loan. So it's how the loan is computed, how you can use the loan, and how the loan forgiveness is computed. So out of this, again, we're only really going to talk about the loan forgiveness. We're not going to talk about how to get the loan and how you can really use the loan. I mean, the forgiveness goes into the use of the loan. So I just want to be clear about that. If you need to know about how to compute the loan, we do have prior webinars, and all of that information is still relevant. Excuse me. So the application was released last Friday the 15th, late. It clarifies some questions, but leaves, I believe, more unanswered than answered. And with the application now released, we're expecting some interim final rules and some more FAQs issued soon. Hopefully we'll get some tonight, like I said, and I know legislation, there's constant legislation going on, and they're talking about voting in new rules next week. I really, really hope some of those changes go through. But as of right now, this presentation is based on the information we have as of today. Things can change, hence the disclaimer at the bottom of this slide deck. There's nothing we can do about changes in the future. We have no control over what the government does, and unfortunately, they change things whenever they want. All right. So loans dispersed under PPP qualify for loan forgiveness equal to the following costs incurred or paid during the 8-week period following the disbursement of the loan. So we will get into incurred and paid in a minute, but just to review quickly, payroll is employee salaries, wages, commissions, sick leave, tips. It includes group healthcare benefits, the employer portion of the retirement plans, state unemployment tax. So that's going to be, or it's basically state assessed taxes on employee wages. So in some states, that's local taxes. Maybe you contribute to the mass PFML for your employees because you're over 25. You have over 25 employees. That's all included. Interest on any mortgage obligations or any debt obligation existing on 215. So interest for, like it just says, rent, real or personal property. Maybe you don't know what real is. That's real is defined as land, buildings. That's what that means. It's just a technical term. Utilities, gas, water, electric, trash, telephone, internet. Payroll is also limited.
You can go on just 1 second, because related to the utilities, I've gotten a bunch of emails related to fuel or auto fuel, basically just filling up a work truck. There's some contradicting stuff that's out there related to that. We're kind of sticking to your typical classic utilities, especially for S Corps. Schedule Cs seem to be able to potentially maybe add in fuel, but I don't have anything confirming that. I've had a bunch of questions related to that.
And just so you guys know, I think some of you have raised your hands. We will not bring on anybody live to ask questions during this time. We'll do that at the very end. But if you do have a question, please put it in the Q&A section. Unfortunately, we just can't bring people on right now. It will just get a little crazy. Okay. So payroll is still limited to $100,000 per year or $15,385 per person. With that, so anything above that, though, so if you have an employee that makes over $100,000 a year, you just limit them at $100,000. It does not exclude them entirely. I think we cleared that up several weeks ago, but I just like to reiterate that. And it also, just because that employee makes over 100 grand a year, that's their pay only. That does not include their benefits. So you can still include the employer portion of their health insurance, you know, their retirement and all that. So it's just their pay that's capped at 100 grand or the 15,385, not their benefits and the additional stuff, like I just said. However, I don't think people are really taking this consideration. The PPP forgiveness does not include the employer portion of the Social Security, Medicare, or FUTA tax, which is the federal unemployment. I think this is very overlooked, and it should not be, because some people got very large loans and they're bonusing out people. But the portion of the employer portion of these taxes is not covered. So that is still paid out of pocket for an employer. So for an example, let's just say you issue $10,000 in bonuses, you have 7.65% of that $10,000 that you are coming out of pocket, plus the FUTA, which most of you probably have already covered. That. It's a very small tax. It's $42 per year per person. But I just want to reiterate that. So that's $750 out of $10,000 that you're going to have to come out of pocket to pay for. So that's on every dollar you're responsible for. That is not forgiven. That's always been the case. Oh, did I just skip the slide? No. Okay. So again, this is just reiterating the eligible payroll costs for loan forgiveness. Salaries and compensation capped at 100,000. Owners payroll. So one of the biggest changes that came across with this forgiveness application, and honestly, one of my biggest, I want to say this properly, disappointments was how they handled owner compensation for the owners of the businesses, S Corp, Schedule Cs, whatnot. We will describe that in more detail. Basically, I think they just they really did a disservice to owners, and I'm really hoping that that's addressed with the changes, but according to what I've read and seen, I don't think they're gonna address it, and we'll go over it in a few. It is what it is. But the other stuff is group health insurance paid by the employer, retirement, state and local taxes. And then for owners' health insurance, again, this has to do with what they did with owners of these companies. We are not clear yet if owners' health insurance, retirement, and the state and local taxes is excluded for S Corps or C Corps, or it's included. For all of us that did the PPP loan application, we included it because it was, they never ever isolated out owners at all, not once. So they kind of went back on what they said. I personally think that they lied and sold something that was not true, and they falsely advertised the PPP in regards to owners. However, for sole proprietors and partnerships, partnerships have K1s, but their income flows through to their personal tax return, and it's all subject to self-employment income. And just in sole proprietors, they file a Schedule C, also subject to self-employment. You are not allowed to include owner's health insurance, retirement, state and local taxes, which is bull. But we're not clear on the S Corp and C Corp owners. I'm sorry.
Can you, about that with the S Corp owner versus employee thing with the owners?
Yeah.
What?
Yeah, go ahead. We're on the screen.
How I'm interpreting that is S Corp owners are still employees because they're required to take a reasonable wage. So I don't care what they say about that right now. I think that's going to change. They just have to be a little bit more firm with the wording.
Yeah. Yeah.
That's going to be our approach, I think, related to that. They're technically employees, even though they are owners.
I know. But they do define it. They do define. So let me just go through this, and then I'll actually read what they have in the loan application as of right now regarding owner employees. So the first thing is self-employed individuals. So it's Schedule C. Maybe you're a single member LLC. You file your business income and expenses on a Schedule C, and it goes within your Form 1040 or personal. So what you do is you take your 2019 Schedule C income, capped at 100, divide by 52, and multiply by 8. So that's how much you can take, that's forgiven. So it's 15,385, but you got 2.5 times your 2019 net income. and then you have no other expenses other than just taking draws, you know, your pay, quote unquote, then you can't really spend all the funds because maybe your net income in 2019 was below 100,000, and if you're doing proper tax planning, you shouldn't be a Schedule C if you have net income at $100,000. So most of our clients are below it. So this is kind of screwing people over. It's the same situation with general partners. They're also taxed the same way. And it's the same exact thing as the Schedule C. I know that's confusing. If you have specific questions, we're working with our clients to explain that. We can go over it again a little bit more in detail. Now, what Jake was talking about regarding the owner employees, you know, from an 1120 or 1120S, that's an S Corp or a C Corp, or C Corp, S Corp. So what they're doing is you take, okay, I'm gonna back up. So what we did when we applied for the PPP loan, you were able to choose from 2 periods. You could choose from the calendar year 2019, calculate all your wages, and then you could use that amount, or you could use a fiscal year time period, which was April 1st, 2019 through March 31st, 2020. And most clients took the larger amount because you wanted a larger portion. And what happened was, we were like, okay, with planning, owners, the way to spend the funds, owners should max out the 15,385 that they're allowed because they own the business and they're the ones that really need the funds. They're the ones not going on unemployment. They're the ones keeping these people in business, and a lot of them couldn't even get employees to come back due to the high unemployment that's available right now. This method was suggested by the SBA directly. And then what they did was they said, oh, owners, just kidding. What you're going to do is take only your 2019 gross wages, divide that by 52, times it by 8, and that's the max you can take. They didn't look at the fiscal year. So as an example, one of my companies, I had lower wages, and it's just owners that are paid through straight line. I have another company I paid my employees through. But my fiscal year, the April to the March, was higher. So I took the higher, and it would have been, you know, dead on, break even. But now I have to look at 2019 and I'm losing money. We're kind of screwed there. So this was my biggest issue. And right now we're trying to figure out how to handle this with clients and the planning, because this is a huge planning portion. We also don't know if attribution rules come into play here. You probably don't know what attribution rules are because you're not an accountant, but what that is, it's basically if you own a company, an S Corp or a C Corp, and you're married and you're just a 100% owner, and your spouse is not an owner, they're technically considered an owner, even though they're not, because you're married to them. Now, not all states have that. It's an accounting rule. They said they were not going to have attribution rules when this first came out, but now they're discussing it. So we don't even know if the spouses that we took on payroll or added to payroll are going to be allowed. That's a huge, huge issue. And I really, really hope they clarify it, and I hope they get rid of this entirely, because it's basically screwing over the people that need it the most, the smallest of the small businesses, which most of you are, including myself. And I'm happy to talk about that more. Clearly, I'm kind of impassioned about it, but that's what that means. I
just think they're overlooking a lot related to the owners themselves. I don't see how, if you didn't take a wage in 2019 as an owner, they can say you can't pay yourself in 2020. It just, that doesn't make any sense. So yeah. A lot of, like, we was on a call yesterday, actually, no, today's Friday, a couple days ago, with a client that's literally killing herself as the owner, and she's not paying herself. When is it going to be okay for owners to compensate themselves according to the SBA? It's out of control.
And also, as the IRS, when Jake was talking about compensation for owners, the IRS defines compensation of an S Corp owner as distributions and the pass-through K-1 earnings. So I personally believe that there's open for interpretation. I can tell you, I have my little accounting gang, about 12 other accountants nationally, and we've been talking about it. A lot of them say it's strictly defined by W-2 wages. I personally think that we could fight it based on if you throw IRS definitions of employee compensation in front of them. But and also, if I read line 9 of page 5 of the Paycheck Protection Program, it says enter any amounts paid to owners. So that's owner, employee, self-employed individual, general partners. This amount is capped at the 8-week equivalent for each individual or the 8-week equivalent of their applicable compensation in 2019. To me, this is open for interpretation. What are they defining as compensation? It does not say gross wages. So again,
the definition of compensation is more than just wages.
Yeah.
So
this is obviously a topic we can debate and we can speculate on. We will not, hopefully they clarify it more, by next week. Obviously, this is going to be a huge pain point for our clients. We're trying to be as creative as possible with this. But there's some legislation changes that are pending or they're talking about that might help a lot of our clients. But for an example, if you were a fairly new business in 2019 and you, for some reason, as an owner, didn't take a paycheck in 2019 for some reason, even though you started in 2020 and used that fiscal period, any wages you took during this period for the PPP is not forgiven at all, which I think is horse manure. So I'm going to move on. All right. So another thing that's unclear and it hasn't been clarified are the terms paid and incurred for costs. So the statute says costs incurred and payments made. This ends up being an either or situation. It's either paid or incurred. It doesn't have to be both paid and incurred. If you're familiar at all with accounting, you have cash-based accounting and accrual-based accounting. That's kind of what this is here. We at first went with the cash basis approach, but we knew that it could be an accrual base. So in our interpretation of this, you can sort of choose if you want to do costs incurred or paid, meaning what this means is, let's say you got the loan funds on April 17th, okay? If you had a check date on April 17th, you could count that's cash basis, and then you would count every check paid during the 8-week period, okay? So you're not looking at pay periods, you're looking at the check dates. The alternative is you could be looking at pay periods. So what are you, and it also, you could actually kind of do both in a way. It's confusing how this goes. There's also an alternative cover date you can start, which we'll talk about in a little bit. But what we're thinking is that let's say you have a utility bill for June, but it's not due until July 5th and your covered period ends June 25th, pay that utility bill in June. And even though it's not due, if that makes sense. Probably not, but that's how it's written. So this allows you to include all check dates, the cash basis, plus lets you include payroll days not yet paid at the end of 56-day period. So this slide, it says you could do both, or you can choose either or. Are we confused yet?
It's extremely confusing and contradictory throughout that whole section of the of that update. It doesn't make much sense. I'm
just looking at a lot of the questions that have come in, and a lot of the questions you guys are asking, we're going to go over shortly. Okay, so one of the good things, I forgot a quotation there. One of the good things there that has come out of this is an alternate covered period. So how the law originally stated was when you received your PPP funds in your bank account, that was the day your 8-week period started, your covered period, okay? However, what they did with this most recent forgiveness application, which I do like, is for biweekly or more frequent payrolls, so that would be biweekly or weekly, payroll schedule, you can elect an alternate payroll covered period. So the period would begin on day 1 of the pay period starting after the funding of your PPP loan proceeds. You can then extend the covered period to include the payroll period. Just imagine you guys listening to me saying payroll period over and over. That starts the day before day 56, but isn't paid until after day 56, as long as you pay it on its normally scheduled check date. You can include that entire pay period, not just the days that fall within the 56 days. So I'm going to give you an example to try to clear this up, because obviously that's very confusing. So we have a real life example. We have a client that this was extremely beneficial for. She received her funds last Thursday, the 14th, remember, I think it was. They had a check date on the 15th. They are a biweekly, I'm talking about May here. They are a biweekly employer. So They were mid-pay period when they received the funds on May 14th. All right. Their next pay period that starts is this coming Sunday, the 24th. What they are able to do based on these rules is elect to start their covered period this Sunday. So they technically don't have their first check date until I think it's like June 12th or something. So that's really good for them because they're not fully open, and now they can actually maximize the use of their funds. So this actually works out really well for people that pretty much just got the funds. If you've already had the funds for 5 or 6 weeks, great. It's too bad, I guess, unfortunately. But what it also means is that so it also covers the payroll, even if you pay it after the 8-week period ends. So that's basically what the slide means. So if they have a payroll period that starts within the 56 days at the end, even if they pay it after the 56 days is over, it's okay, it will be counted. So again, this can be very beneficial, and you can still, I guess, technically, even if you got the funds 4 or 5 weeks ago, elect to have this. We have actually recommended some clients hold off on even starting to take, paying things just to try to lump it in towards the end. This could help those people as well. So this is just something to think about. It really, really benefited the client we spoke about because now she'll be able to bring people back and probably use all the funds the way it's really intended for.
I do have a couple clients as well that we thought we were going to be down to 7 weeks. They got their funds later on in the week, hadn't been able to, add anyone back by that point. So we thought we were down to 7, but now we're able to shift that period to 8. So if that is the case for you, that is something you're able to do.
That should help people, hopefully.
Mm-hmm.
I worry about them bouncing back and forth between the covered payroll costs in certain areas of the application versus that alternate period that can be used. I'm worried about that because it's they're picking and choosing where and when you can use it. And I think they need to be a little bit more consistent with that.
And Erin, just to be clear, this is not just, once you pick this period, this isn't just for payroll, this is for all expenses.
Yes, so that's when your covered period starts. So if your covered period, if you elect to choose like a week and a half after you've received the funds, that's when your period starts. You can't really pay bills in between that period. If they're for the expenses, like if you happen to have paid bills in between and they're for expenses for the covered period you elect, then we believe there's some wiggle room there and you'll be okay because it's for that period. But if you do that, please, if you do choose the alternative, maybe just wait until that 8-week period starts. But if you've already paid those bills, we can work. So one of the things I do want to say about this is the relationship you have with your bank is going to be very important because they're going to be the ones that are going through this. So I personally believe that when these applications, first I will say, I think these applications will dramatically change in the next few weeks. But I don't think these applications are black and white. I think if you have extenuating circumstances or there's something that you need to explain, again, for the same client, they're using week of February vacation, they had a huge increase of employees during that time period. Well, that fell within February 15th. They're using the February 15th date as a period to compare to 6/30 for your full-time, your full-time equivalent count. I believe that, and that's not accurate for them. I believe that we will be able to go to the bank and say, listen, this was not a normal pay period for them. Look at January, look at December, whatever. They're going to be able to argue that with the bank and not have to count it. So I do believe having a really good relationship with your banker is going to make a difference, and also providing backup, and whatnot. Just like if you were going for a loan for your home, you're allowed to have explanations for certain things. So I think that answers I think that's.
Yeah, I'm not trying to sell our service on the forgiveness stuff, but it really would benefit everybody to not tackle the forgiveness alone, especially with speaking with banks about this stuff. It's almost like when you go to refinance your house or buy a property somewhere, usually an accountant gets involved in some level, and there's different types of responses that can really be beneficial with working with banks. And I think that's going to come into play for most people. Like we have, I had a call with Stacy. I don't know if she's on here today. she has a very unique situation with her payroll. Her payroll basically stops as of 6/1, which is in the middle of her covered period, and starts up with basically a new group of employees. Luckily, they're all making around the same amount of money as far as their rates go and their pay. So she's going to have some hoops to jump through with the underwriters or whoever ends up handling the forgiveness. And I think a lot of people are going to have to jump through hoops and answer a lot of additional questions that they may not have the answers for. So it's going to be good to work with somebody if you can. It makes sense to do it. It's going to be worth it.
It's basically, it's like, this is what people like us do all day. It's just like, I would never recommend people do payroll on their own, for an example, because you don't know tax code, just like I can't color my own hair or change my oil. Do you know what I mean? That's different. So I think people are going to be throwing their money away not to work with a professional, literally throwing their money away, unfortunately, and putting them in a worse position loan-wise. But okay, this basically just reiterates what we just discussed. Only biweekly or more frequent payroll schedules. So it's basically, if you're a monthly payroll or a semi-monthly payroll schedule, you cannot elect this. And this goes over exactly what we just discussed. So, and you do have to keep your normally scheduled check date. We have been kind of manipulating check dates with the current planning because there was nothing that said anything about it. But I think if you choose the alternate payroll period, you have to stick with your normal payroll schedule and check date is. And again, we think this is going to be helpful for some borrowers, some it won't really matter, but okay. So we have a polling question. I'll start that right now. If you please just vote, answer the questions, that would be super.
That's a fabulous picture, Armani.
And regarding so the question is, have you had any issues rehiring due to the unemployment benefit plan that's been released? A lot of our clients have had this issue. They can't bring people back. People are refusing to come back. I did just read something just this morning that said, hopefully they're not extending that additional $600 a week. I know that some people will say, well, that sucks, I really need it. And I totally understand that. But I think the overall benefit will be for people to stop getting the additional fund, the $600 a week, because people just do not want to, a lot of people just don't want to go back to work. And how is that going to help the employer bring people back? That's
if the business isn't open, they're not going to have a job to go back to. So it's still, you got to think long term with some of this stuff. It's a quick pop to get people some money, but 6 to 12 months from now, is that business even going to be open is a good question to ask. So I think a lot of people are thinking short term with getting these benefits. Just talk about this other stimulus check where people are going to get paid $1,000 to $2,000 a week or a month. I forget what it is exactly, but I just don't see how that incentivizes anybody to go back to work at all. I just feel like that would just create
and then you have owners working owners and the few employees that are working like dogs, basically trying to just keep their business alive. All right, I'm going to end the polling. I will show the results. So fortunately, a lot of you, we only had about 38 people vote, but out of our entire thing, a lot of you haven't experienced that, which is great. I'm glad to see that. Some of you have experienced issues. I know, especially in the trades and contractors, they've experienced it a lot. So I'm hoping that when the restaurants are finally able to open, the reason why I want them to stop the $600 a week too, is hopefully that's when that allows the restaurants to hire, because those are the ones probably being impacted the most with the extra $600 a week. And it'll be really, really hard for restaurants to get off the ground if they can't get employees, because the employees don't want to get off unemployment. Okay. Moving on. 1 second. All right, I'm gonna close. All right. So the eligible non-payroll costs, again, this really hasn't changed at all. Must be business related and in existence on or before 2/15/20. Interest, not principal on mortgage, real or personal property. Rent on real or personal property, so office, storage, equipment leases, and we've actually seen auto leases included in here. I'm going to put a little asterisk there because I'm not positive I want to say, I'm not positive that's included, but we have seen some stuff on that. I wouldn't personally completely go with that, but it could be a possibility. Utility bills, again, electric, gas, water, transportation, telephone, or internet service. So one of the things that we have been doing with our clients is a lot of our clients are reimbursing their employees for basic utilities because they're all working at home. We are including those. Even though they were not in existence prior to 215, the employee had them. We will fight for our clients to have them included because these people had to work home, so they have to reimburse their employees for some stuff. So, and it's part of the planning. So and the consensus among our accounting group that we have is the same as well. So basically, if it's not listed above, the answer is no. And these costs, and these cannot be more than 25% of the total forgivable debt. Obviously, you can spend more than 25%. It's just not going to be, more than 25% will not be forgiven. Okay, so one of the big hot topics that was a couple weeks ago was people are up in arms is that the actual PPP expenses will not be allowed to be deductible. It's basically considered double dipping. So what you do is you get the loan for free. Let's say it's all forgiven. Then you have all these expenses. You're not allowed to deduct them. So that's actually, most people haven't really spoken about this. It's going to create a very, very significant tax problem for a lot of businesses. So owners are taking checks out of this, which is, and tax, that portion of the wage is not going to be deductible. Those expenses, which they would have normally paid anyways, is not deductible. But then you also just say there's probably a reduction in sales during that period, or revenue during that period. So it's supposed to be a quote unquote, I guess, wash. They're still discussing this. There is a precedent set back in the early 1980s. Something similar like this happened where they had something like this and they actually passed it that those expenses were deductible. I don't know if they'll look at that, the precedent, but an attorney probably could correct me a lot more, but that's what I've seen. And hopefully maybe next week they'll make a change of that. I personally don't think they're going to, but what that means is it's not taxable. So for clients and business owners, your books are going to need to be in a really good shape because you have to do your tax planning. You have to do tax preparation. This isn't just about like people are just putting their head down and just thinking during this period, it's all they have to think about. No, you have to have all your ducks in a row because come tax filing time and tax planning time, all this stuff has to be sorted out. Everything has to be accounted for perfectly. And I don't know how it's going to report in the tax returns, but major tax planning is going to have to go into this as well because it's just going to make a huge difference. Hopefully they change it. It'd be great. Okay. So how to achieve maximum loan forgiveness. And this is basically what we went over in our webinar a few weeks ago, planning. You will need to project how your funds will be used on authorized expenses. Execution must constantly be reviewing the spending plan and compare to actual to ensure you meet these goals set forth. You have to document everything as well as you can. And there's not a ton of guidance available on that. And then record keeping, very clear records will be needed to prove forgiveness qualification. So as an example, I'm sure Amber can get into this a lot more, but we have part of our PPP or COVID assistance is literally a handheld planning process. Weekly, our team is on the phone with our clients. They do a weekly call. They do cash flow forecasting and projecting. They make adjustments where necessary. They discuss how they're going to hire employees. That we are doing whatever we can to ensure that our clients are going to receive maximum loan forgiveness. Obviously, we have to now adapt based on the current situation, but at least we're in the position now because we've been doing it all along to help adapt the best way that we can. This includes also, you shouldn't just be paying this stuff and then do the bills, do your bookkeeping later, because you're going to want to get your loan forgiveness application in as soon as possible. You're not going to want to wait. I personally would not want to wait. And they have to do it they have to approve it within 60 days after you submit it. But having a really good plan and hand-holding and projections is key to this. That's why we preached it in the beginning. And I really hope that everybody's doing
I'm
it.
wondering if that's going to stick to that 60-day limit. I don't see how that's even feasible for them to be able to review.
Oh, they're going to have to hire a whole new agency.
I don't know how that's going to stick. I think that's going to get extended out. It's just that to me is where all the work is going to be done. And that's going to be lengthy. That's going to take a while. but
Well, I mean,
we'll see.
the application's a short and sweet 11 pages. So, all right. Let's do this. So this has not changed yet. You still have to apply through your lender. As of right now, that's what it is. So thoughts on what lenders might expect to see. On the application itself, there is required documentation that you do have to submit. We'll go over that in next week's webinar, but you will have to verify, you know, the period you choose for FTE counts for last year or whatever period you chose, payroll tax filings, all that. You will have to show copies of receipts and bank statements, clear checks for you know, the non-payroll costs that you had and the health insurance and all that you paid. And then many banks have also been sending out and creating their own worksheets and own forms. And just like with the PPP loan application itself, the banks made up their own rules and interpretations, and a lot of it was incorrect, and then kind of you know, screwed a lot of people out of getting the loan at first, and then they changed it. So what is good about this coming, I mean, they should have come out with this a long time ago. Hopefully the banks can actually catch up and learn about it before people start applying, and they can be ready for it and everybody on the same page. But hopefully.
And hopefully the bank that you used is a bank that lends
Yes.
consistently and all the time, and they have a good process for lending, so they'll be used to going through this process, because otherwise there's certain banks that are good with small business lending and some that aren't.
Yeah.
So that's going to be a big piece too that's going to come into play, is how the banks actually handle this and how they treat it. So
I also believe what's coming out of this is really shining on how important it is to have a relationship with a local bank. People, unfortunately, that have larger banks might be the ones that lose on this, because they don't have somebody. I mean, I can go call up Donna over at Rockland Trust, or, you know, Mary at Eastern, and they can help me and my clients. Unfortunately, so not that that really helps now. I know it's kind of like a moot point right now, but for the future, having a relationship, just like with local businesses, with a local bank, is really invaluable, and it can help with all sorts of things. Okay, so what if you don't get debt forgiveness? So there is a very real possibility that you might not meet qualifications to receive 100% forgiveness. Any amount not forgiven will remain a loan at 2 years at 1% interest. The payments start on the 7th month after the loan disbursement date. So it's deferred for 6 months, and you may pay any amount not forgiven back at any time with no penalty. So let's say you're doing all this forecasting and planning, and you realize you really won't spend like 12 grand of it. You can just set that money aside and just pay it back when they request it. That's fine. And we believe that the literature has been, you can refinance the PPP loan into your EIDL loan. So a lot of you that applied for the EIDL loan and advance/grant received emails over the past week and a half saying that you had a loan there to go sign e-docs for and potentially be approved up to a certain amount. You can we don't know this for sure. I think it's sure that you can actually, you know, take your any unforgiven amount of the PPP, pay that with the EIDL, and essentially quote unquote refinance it, which is a much better term. If it's whatever's not forgiven, that's 3.75% over 30 years. A little side note about the EIDL loan, we're not exactly sure how it can be used yet. That's why we're not sure if it can be PPP, but my personal opinion about the EIDL loan, if you got that email and it asked you to go you know, e-sign for it to see what you're actually eligible for, I personally believe that you should go get it. You can just go stick it in an account and not touch it. You don't start making payments for the first 12 months. It's kind of good to have as a safety net. Most small businesses are not able to get loans anyways. So this is a great opportunity for a business that may not necessarily have been able to get a traditional commercial loan to have one. It's super low interest. Most commercial loans are, I think, between 6 and 9% interest, and the terms are between 10 and 20 years. This is a 30-year at 3.75. Take it, let it sit in an account, don't touch it. Maybe you need it, maybe you don't. Maybe in a year, if they allow it, if it's allowed in the funds, you want to go, you know, add an addition, you know, do build out of a lease in your restaurant or something like that. You could have the funds at a pretty low interest rate and not have to go apply and all that stuff when you're probably going to be denied because of what happened here. So that's just my 2 cents on that. Okay, so ways to lose forgiveness. Pay rate reduction, and we're going to go over these one by one. FTE reduction, bad documentation, 25% non-payroll costs rules, failing to spend at least 75% on payroll cost rules, gone, we'll talk about that, and then failing to spend the full amount of the loan. So number one, pay rate reductions. So I'm not really going to get through the calculation of these things, kind of like I have in other things. We're going to do that next week. Again, a really exciting webinar coming up. Pretty important though. Chapter 1106 of the statute makes 2 adjustments. One of these is a pay rate reduction. So the formula adjusts the initial eligible forgiveness for an amount for any reductions in pay rates, oh my God, in excess of 25%. Next slide, I'll go over what exactly that means. Ignores pay rate reductions for employees who earned more than $100,000. So if you had an employee that earned 125 and now they're down to 105, they don't care. Everyone else, a pay rate reduction in excess of 25% further reduces the amount available for forgiveness. The comparison period is 1/1/20 to 3/31/20. So basically you take the number of pay periods you had during that period, you divide it by, you take the average and you figure out what that average pay period was, average pay was for each employee per week. All right, so, which I think is funny because that's a 12-week period or 12 or 13-week period, not an 8-week period, but whatever. All right. So an example, the best way to explain the pay rate reduction example is an example. So let's say you had an employee making on average $1,000 a week during January 1st to March 31st, 2020. Now that employee during this, your covered period, your 8-week period, is averaging $250 a week during the covered period. Over the 8-week period, that is $8,000 versus $2,000. Obviously, their pay went down. So a reduction to 75% would have been $6,000. So if they had been making $6,000 or more, you would not have had a reduction. But now it's below the 6K. The total reduction is $6,000, but the $4,000 is the portion that is reduced dollar for dollar. So if you reduce it 24%, there's no reduction. If you reduce it 26%, the amount over the 25th percent is the amount you reduce dollar for dollar. Okay, most must figure this for each employee. So if you had a bunch of employees, now you have to go calculate this for every single employee and ignore those, again, paid over $100,000 annually. It's gonna be fun. All right, so disclaimer on this. There is not clear guidance to tell us if this is applicable to the employee's rate or total pay, which is based on hours worked. We are waiting for the guidance on this at this point, but please stay tuned. And the conservative approach is to assume it's total pay until better guidance is issued. This is how most professionals are interpreting the existing guidance. And this is what we agree with. So I don't know if that makes, I think that makes this pretty clear. So just whatever the average pay was, regardless of their pay rate. So there are some safe harbors here for the pay rate reduction. And these are not that easy to understand. So if the average annual salary or average hourly salary was reduced in the period from February 15th through April 26, 2020, as compared to 215. Remember my example of the people that had the school vacation? This is where this comes into play. They have much higher employee count during school vacation because they service children, okay? And they're obviously children get, they have services for children during school vacation because they're not in school. So they had a much higher employee count. So what they're doing is, if you reduce the average hourly amount between that period right there, as compared to 215, and you restored salary or hourly wage levels by 630 for that employee, there is no reduction in forgiveness, okay? I don't know how other way to explain that. But if the wage was reduced after 4/26 and then restored by 6/30, you still have the reduction to forgiveness. And we obviously find a problem with this, because what if you brought people back after, off unemployment? I'm not really sure. It's kind of crazy to me. It's bonkers, but hopefully they're gonna change that. So basically you want to look at that period, the February 15th through April 26th. If you had people on payroll, you want to compare it to 215, and everything has to be restored all kosher by 6:30. Okay, the second portion here, FTE reduction. This is a portion that can reduce as well. The second reduction to forgiveness under 1106 statute is the headcount reduction. Now, this has been really fun trying to figure out. They never gave us, when we were doing the application, they never gave us like the type of hours we should use, 30 versus 40. Fortunately, our firm happened to use 40 hours to calculate the full-time equivalent. And by the way, full FTE is full-time equivalent. So when people were doing the PPP application, most people were not doing the calculation right. So if you have somebody that works on salary that works 40 hours per week, yes, that's a full-time equivalent. But basically what you should be doing is taking these periods here, taking the total count of employees, divide the number of pay periods, dividing by 40, and that gives your average number of FTEs, okay? So just because you in your mind think that you have a full-time employee, maybe that full-time employee works 32 hours. That goes in the calculation with everybody else. You add it all up, take the average, that's the full-time equivalent. That's why you have to actually do calculations with this. So they did define full-time employee by 40 hours and doing the same calculation that we did, thank God. So what you're gonna do is you're gonna take your your FTE count during the 8-week period and 630, and you're gonna compare it to one of these three options here. You can either use 215 to 630 2019, 11 to 229.20, or if you're a seasonal employer, you can choose a 12-week consecutive period between 5/1 to 9/15. Personally, there's a couple different theories on this. So what we did with our clients, we chose the lower amount we chose the period that had the lowest count of employees. Some people say, well, maybe you want the higher one so that the fraction, when you are figuring out the FTE drop, you have a higher rate of employees, so the percentage is higher, so it gives you more people to produce by. But I personally think you should choose the lower period. I don't know why seasonal would choose the higher period and then not be able to bring anything back and then compare that. But businesses can elect this period. So what's good about it, what I get out of this is that it doesn't really matter what you put your PPP application. They probably will look at it. But if you're one of our clients, we used these periods and we chose the lowest amount, the lowest employee count. So you're gonna have to calculate this. All right. So again, you're gonna use the 40 hours per week as full-time. Each employee can only count as one. You don't count overtime hours worked, which we did not do either. We just did the 40 hours, but it does include sick leave, like sick pay, holiday, vacation. It just does not count overtime. Okay. So again, you can use a method by which you simply assign 1 for all employees who work on average 40 hours per week and 0.5 for any employees who work on average less than 40. I think 0.5 is stupid, because what if you people that work 10 hours a week? Then you're kind of just over calculating it for yourself, and that doesn't help you. So you actually need to do the actual calculation. However, you do not include owners in this calculation. So what's good about this is that we did include owners, so we counted them as the FTE count for when we did the PPP application, because we were not told not to. But for this, we're gonna hopefully compare, it'll be a wash since we can't include the owners. That means when you're doing your FTE count, you didn't include the owners of the look back period, and you're not using it for the 8-week cover period or the June 30th date. I hope that makes sense. All right, so there was something that came through that I'm really happy that came through. This came through a couple weeks ago, actually, part of the FAQs from the SBA. So there's an exemption. For those that meet either 1 or 2 below, there is no reduction in FTE for these employees. For each employee, so let's say you try to hire people back, okay, same wages, same hours, apparently, and you made a written offer. So you have to had sent an email to them, sent them a letter. I'm not sure if texts apply, but technically it's written.
I would stick with something
Yes.
written and not a text, just in case.
So let's say you offered somebody the job and they denied it. Okay. Well, first of all, if they denied it, you can go to unemployment and tell them you denied it. They denied it. They're supposed to take them off unemployment. Whether or not Massachusetts will do that, because Massachusetts loves people in employment, who knows? But I would, if you haven't given the written offer, I would go back and give them send a written offer to them so you have it in your records, because what it will do, it will remove them. It will remove them from your FTE count, which is huge, because I know a lot of employers had this issue. Also, if they were let go for any, a cause, like you fired them, they voluntarily resigned, or they voluntarily requested a reduction in hours. So if you have someone quit during this, that counts. They don't have to be counted anymore, which is great. Or they, fired for cause. You just have to show the cause. In Massachusetts is very hard to do that, but that's okay. I'm sure our friend Therese Barbadoro could elaborate on that. But this is really, really good. So if you try to hire people back and they denied you, not only are you supposed to go, but you also do need to report that. If you offered someone a job and you did not go, and they said no, and you did not go to unemployment and tell them that you offered them a job and they denied it, that could come back at you, and they could make it count towards your FTE. I don't know how they're going to match the two, because the state and the federal system is different, but this is good for some people. I think it's going to be really good for people, because they won't go to the FTE count. Okay. All right. So if the average FTE was reduced in the period of the February 15th through the April 20, 2020, as compared to 215, and you restored salary or hourly wage levels by June 30th for that employee, there is no reduction to forgiveness. Okay, but if the FTE was reduced after 4/26 and then restored by 6/30, did I go back on this?
Yeah.
I did, I went back, okay. No, I didn't. Okay, that's okay, we already went over that. So we're gonna go to the next polling question. I'm gonna try to look at the Q&A.
There's a couple, there's a few like kind of very specific questions people have.
Yeah, I'm gonna try to do that.
Missy has a really, I think, a good example of a good question that I think a lot of people are going through that we can go over.
I read it.
Well, it's already closed out, but the
answer.
premise of the question, just go through the poll first. We'll do the poll first.
Well, they can, yeah. So, and if you guys did it, so is it a client's business is basically closed, allowed to be open? She's on unemployment, wants to keep a PPP? Is that
No.
it? Okay.
But the premise of her question is Schedule C owner based the application on net income just for the owner, no employees, 2020 hired employees. How is the forgiveness going to be calculated?
Like, is he able to use it for payroll cost for
Right.
employees?
Are you asking the question, or are you going to give the answer?
That's what the question was.
Okay, yep.
So what do you think? Because I'll give you.
I think they can use it towards payroll.
Yeah, that's what I think too. I think it's just, it'll end up being.
I don't think it
just
yeah.
be. He'll just have to produce the payroll records and all of the payroll related stuff for the period. So Missy, if you still have another question related to that, let us know. You should be able to include.
So Bridget asked a question. I have 2 seasonal employees, so I always hire April through August. I hire them the 8-week period, but then they did not work during that look back period for the wage reduction, which is January through March 2020. How do I manage that? So in your case, you're at 100%. Like you're fine, because according to this now, because the look back period, because we have a lot of seasonal clients that they didn't pay during that period. You do not have a reduction in wages, therefore you're fine, because you didn't have anybody working in January through March. So you should be totally fine, Bridget. How long after June 30th do they stay restored? So we think the June 30th day is going to be pushed out, because you'll see some changes that we think are going to happen, or we hope, or may happen. I'm kind of up in the air about this June 30th thing, because a lot of people can still apply for the PPP. So I don't know if but as of right now, it doesn't say anything. You can't lay them off a week later. So as of right now, it's just, you just have to restore them by June 30th.
I think they have to change that and tie it to every state opening and closing and what the states are doing individually. Unfortunately for the SBA, they're going to have to do some work because it's right now, it's not really working for people that are either partially closed or completely closed
And
that have the funds.
we also get this question all the time. What if I bring people back for the 8-week period? My 8-week period, let's say, ends June 18th, but I have to lay them off because I can't open. Does that still count? Because I had to lay them off. The answer is I don't know yet. It's actually one of my main questions, and I probably ask it once a week to my accounting group and wherever. I'm not positive. I'm not sure, unfortunately. So 3 questions. We have an employee leaving and has accrued vacation. Can we include that vacation pay in the calculation? You are supposed to be able to include vacation pay. Yes, it's all type of pay. So severance, vacation, maternity leave, whatever, jury duty. I don't even know if I have jury duty right now.
With the exception of any pay that was used with those credits, correct, Erin?
Oh yeah, if you had the credit, if you guys use the credits, the paid family medical, the paid, no, not paid family, that's Massachusetts. What is it, FFRCA, CRA, Families First Corona Response Act, the one where you had paid medical leave for your employees. If you use any of those credits throughout this PPP period, those have to be completely excluded from the PPP loan amounts, forgiveness, all that stuff. But so if you have accrued vacation, can we include that vacation in pay in the calculation? Yes. So let's say you have an employee leaving and you have to pay out that vacation because it's required in Massachusetts. My understanding is that will count because you're paying it out and they're leaving and you're required to. You also can include severance too. We have another employee not leaving. We have another employee not leaving the organization that we are buying out vacation. Can we include that? I assume no. I'm not sure. I mean, I think you can, but I don't see why not. I just see these very unique situations here. You're just not really allowed to prepay wages. You can't do advance pay on wages. So I think it goes into what you call it on the paychecks. We are paying a bonus out to an employee. Can we include that? Yes. As of right now, there is nothing against saying you can't bonus out an employee. You might have to document how that bonus was earned and what the merit was that got it. But that's what a lot of our clients are doing. They're bonusing out employees. It just cannot be considered like advance pay or prepaying employees for the future.
There's a good question here. I was about to answer it, but I just don't want it to go away because this is a common question I'm seeing. If an employee that was furloughed either chose not to come back or we choose not to bring them back, but we hired someone to replace them, would that count against us? As of now, Erin, Jake, correct me if I'm wrong, they're not going off of names at all. It is strictly off of numbers. So if you were to hire someone back, is that correct?
Yep. And the reduction in wages does not count against you.
Right.
Either. I don't believe. So if you add somebody and you hire someone back at a lower rate, because it's a different, that's the only time when you have like the name thing, that's the only time it doesn't count. That's okay to put the.
Yeah, it should not count against you.
Yeah. Because the whole idea is to hire people, so. Okay, let's see.
You want to hit the poll?
So we had, would you like to see the 8-week covered period extended? Yes, to 8 weeks following the state reopening date. Yes, for a period longer than 8 weeks, or no. Okay. So part of the legislation that they're discussing is extending the 8-week period. I've seen 12, 16, and 24 weeks. That's extending the, and we're going to get into that a little bit, but extending the covered period would really help the issue with owner compensation for 2019. That would help it because they could spread their payout longer and have it actually forgiven, assuming they took a paycheck in 2019.
I think they should tie it to being 100% operational according to the state guidelines. Because every state's different. Like if you have a restaurant, you're only 25%, you can only have 25% capacity. I don't see how this helps you at all. if you can, they're putting a ceiling on what you can earn.
Mhm.
And I don't see it. I think they have to tie it to that. They've got to do something different with some of these dates. So if they're able to tie it to when you're actually able to be 100% open, you can hire everybody back, then you can actually use the money instead of just throwing it out the window, which is what a lot of people are doing right now.
Yeah. So we're back on loan forgiveness reduction. So bad documentation will definitely reduce your forgiveness. If you cannot produce documentation to prove all this stuff, then they have nothing to back up to give you the forgiveness. So, and this goes hand in hand. Like we have clients that have notices and all that. The easiest way to get out of a notice, people always call them audits, is to provide the documentation. Once you provide the documentation, you kind of shut them up, right? So many IRS audits are lost only because they lack good documentation. That's why we have tools like Receipt Bank to tie to clients' transactions and things like that. Same kind of idea. For our clients that we're doing this planning for, we're having them send over the copies of the statements and the invoices that they pay as soon as they do it. We're keeping track of the bank statements and the check images and the drafts that come out of the account. It's better to do it as you go than to do it after the fact. And kind of have a folder set up or something so you have everything stored. I would name and date the files really well. So you're going to have obviously payroll reports, payroll tax filings, cancel checks, payment receipts, transcripts of accounts, meaning like copies of bank statements, or other documents verifying payments on covered mortgage obligations. So obviously mortgage statements.
Yeah, just a tip, banks typically, the underwriters do not know a thing about payroll or how a tax return works or any of this stuff. So they're going to be relying on the applicants and whoever's helping them put this documentation together to have it complete. The key is to have it tie out perfectly to what you applied for and what your forgiveness percentages, amounts, all of that stuff, whatever you're going to be reporting. Make sure your backup ties out to the T so that they cannot question it, because they don't know what they're doing.
It'll be a lot easier to hand them a nice little package wrapped up in a cute little bow that perfectly ties out than just handing them a bunch of paperwork and saying, figure it out.
Yeah.
They won't.
Because that's going to lead to saying no to getting this.
They're just going to say, because I just read an article today that when banks start getting this forgiveness applications, it's actually going to be worse than the actual loan applications themselves, which is mind-boggling, because I personally know many bankers that were up doing all-nighters during this loan forgiveness. They basically, what they have to do to process these loan forgiveness applications is go through the entire loan process again.
Yeah. So,
and create all new systems. And I mean, not that I feel bad for banks because they're not being compensated, but they're doing it essentially for free. So it's going to be very interesting to see. That's also why I think people should submit them as soon as your covered period's over. I do believe they should be submitted right away, just to get on, just to do it. So it's very possibly that some small businesses will spend enough money on the appropriate expenses, like you're doing all the right thing, but then you have the lack of ability to prove the PPP loan funds. And so that's I think going to be one of the most common things. People actually might spend it on the right stuff, and then they just can't prove it. Okay, just reading this. So we've also been advising clients. We had them set up a separate account. Either they had one already or they set up a new one, deposit the loan and funds in there or transfer the loan funds in there. And then each time they have an expense, we're having them transfer the amount out for that to cover the exact expense amounts and still pay the expenses out of their operating accounts. It just helps separate things and really isolate things.
Yeah, there's some different ideas on that. We've talked to some other CPAs and accountants that are not doing that. They're just continuing to keep client books as they are and just recording the deposit, probably isolating the deposits, and they'll end up just pulling reports that will isolate the expenses. But to us, it's a lot easier to strip that out and set up different accounts to really make it easy for the bank and the underwriters or whoever is going to be reviewing this stuff, because that's really the key. It's not an accountant that's going to be looking at this. It's going to be somebody at a bank. So,
and also during this, you have to think about this too. When you go file your tax return or do tax planning, you need to be able to prove because I feel like the IRS is going to do the opposite. They're going to say, oh, you have this 8-week period. None of these, you're going to have to prove that a certain amount was not forgiven or was not part of the PPP. So you really want to have your accounting ducks in a row.
That's a good point.
Yeah, thank you. All right, so the 25% non-payroll cost rule. The Act says, so this is still part of the forgiveness reduction. The Act says you can receive forgiveness if you spend money on the payroll, rent, interest, and utilities. The SBA redefined this in the interim final rule and said that non-payroll costs can't represent more than 25% of the loan forgiveness amount. So you just have to be careful on how you're reporting the non-payroll costs. You don't want to, even though you might have spent 40%, you really aren't supposed to use funds, the PPP funds, for anything above 25%. You just really shouldn't. Like if you have to split up payments or something, that's why we're kind of paying it out of the operating account and just transferring the funds out of the PPP account. It just makes it easier again to document and show and prove. So another way to reduce forgiveness is failing to spend at least 75% on payroll costs. So right now you're supposed to spend at least 75% of the loan. You can spend up to 100% on payroll costs. If you don't spend, so it says right here, at least 75% of PPP loan proceeds should be used for payroll costs. So before, when they first put this out, there was what they called a cliff. So meaning if you didn't spend 75% of the fund payroll costs, it's like a all or nothing rule. That's been removed. So let's say you spend 70% on payroll costs. It's a phased forgiveness. So it's not an all or nothing. But some people got loans and they just can't spend enough money on payroll to use all the funds. That's okay. But with our planning that we're doing, they're going to know how much exactly to a T, basically, for the most part, how much is not going to be forgiven based on the payroll costs that they haven't spent. Okay. So there's a 75% rule. That's just a little side note. PPP loan formula provides you with 2.5 months of payroll. Per the SBA, you must spend 75% of this on payroll. This comes to 1.875%. There's a calculation. So 1.875 is greater than 8 weeks, as 8 weeks is equal to 8.14 months. So the SBA said, okay, yeah, it's fine, round it up. So they don't even know their own math, but that's fine. That's basically what that's saying. So failing to spend the full amount, this kind of goes hand in hand with you're not able to spend all the money. Obviously, if you can't spend the full amount towards forgivable costs, you can't have the full amount forgiven. So the full amount forgiveness starts with how much you actually spend. Many companies will find they won't be able to spend 75% or more on payroll at normal pay rates. With the newest guidance, it appears you'll be able to include more than the originally defined 8 weeks by counting payroll that is either paid or incurred during the period. We discussed that's the alternate payroll period and all sorts of things that go into it. So again, projections are needed to know how much additional will need to be spent to use up these loan proceeds. This also goes hand in hand where we had owners maxing out the $15,385, bringing on their spouses. They're the ones that need the money so they can keep the business running, but apparently it doesn't matter. But also giving employee bonuses out, stuff like that, or basically paying people to do nothing, unfortunately. That's another reason why we hope they extend the weeks sooner rather than later. Okay. So just to put this in here, because a lot of you received the EIDL grant/advance from the EIDL program, the past month. That was up to $10,000. Most of you got like maybe $5,000. It was a $1,000 per employee, they decided after that. So that is a direct reduction of your PPP forgiveness. So if you got $100,000 PPP loan and you got $2,000 for the EIDL loan or grant, you immediately off the top do not get $2,000 forgiven, only $98,000. My suggestion was for people that don't really need that advance/grant, I personally think you should just set it aside, not touch it, not use it, and then just pay it back when you go for the forgiveness. You could always just set it aside and maybe have it for a rainy day if you need it, or if you really need the funds. Obviously, some of you actually really, really need the cash flow. So if you have to spend it, you have to spend it, and it will just be that portion let's say you get quote unquote 100% forgiveness and they just reduce it by the EIDL advance, and that's the only loan you have that you have to pay over 2 years, that's not a big deal. But it will be payable under the 2-year terms. Workers' compensation payments are not forgivable, Bridget. Just letting you know. Just saw that quickly. Disability insurance payments.
I don't believe ancillary benefits are either. Short-term disability, long-term life insurance, things of that nature.
I didn't hear the first part. What did you say?
I don't believe ancillary benefits like short-term, long-term life are included in the forgivable costs as well. I think it's strictly like health, dental, vision.
Yeah, unless the only way is if you're deducting them from employees, that's in itself, because it's part of the gross wages anyways. But if you're paying it, if like you have an employer portion, let's say you offer short-term disability and you pay it 100% for your employees, that does not count. However, the Mass PFML, if you're contributing towards that, because that's technically a tax, that does count. Welcome to Massachusetts. Okay. Again, planning. I know some of you in there, it really isn't too late to plan. It really isn't. It's better to start late than never, to be honest. Project what you already have spent, you know, see what you already spent, project for the future, considering this kind of opportunities, staff that not be able to work to lack of work of COVID. So basically taking people on that have nothing to do. Or, I mean, you could use these staff to help you start generating new products and services to actually, so when you can open up, or even now, you can start offering services to people. There's the world after this gets back to normal, quote unquote, will not be the same. So finding out different ways and getting your team involved in different ways to generate revenue is not the worst idea, especially if you're paying them. Paying bonuses to workers. Be sure to include the payroll at the end of the 8-week period to pick up any days not yet paid. And then also offer retention incentives to get workers to come back from unemployment. There are benefits. This really has nothing to do with PPP, but there are benefits as a small business employer you can offer to employees that really don't cost you anything. You can offer things like vision, dental, disability, accident insurance that it doesn't cost you anything. The employee does, you know, it is deducted from the employee's pay, but that's huge for a lot of employees. They want to have benefits. There's all sorts of other things you can do. I mean, I don't, depending on the industry you're in, you can offer work from home, remote working, and obviously there's productivity issues that come up with that, but there's lots of things you can do. We're happy to help talk about that. We do it a lot with our own team and then with a lot of our own clients. So got to think about outside the box to get people to come back. People are very short-sighted and they think of just the next week, the next month. They don't think of, okay, I'm going to turn down this job now. What am I going to do in September? So hopefully these people, you know, really appreciate you as an employer, want to come back and just give them some incentives to come back that that actually don't cost you anything. All right. So what we know now, I don't know much now, but is legislators are actively working to change the PPP forgiveness rules again. So if you see the news, you'll just see that they have like everything I open up is a different thing that they want to change or add. I don't know. Managing each of these funding sources separately is going to be an accounting mess. So yeah, if you laid off your staff and you're paying for their insurance benefits out of pocket, yes, that's considered part of the PPP forgiveness. Yes. We had a lot of employers do that actually. So you must figure out how to prove funds from various sources were spent on specific costs, fully document it, and not mix it with other funds, just like we discussed, documentation, record keeping. This all must be done now. So do whatever you can to document all this stuff. And planning is required to ensure you are in compliance. Each loan grant has specific requirements on allowable uses. So if you got the PPP funds and you paid off all your debt, you used it wrong, and technically that's a felony and you go to jail for that. So you're not supposed to use it for that. The PPP loan was intended only for the costs allowable for forgiveness. Even if you didn't intend on using it for that and you don't care about the forgiveness, you are not supposed to use it for anything other than the allowable costs. Technically, that is fraud, bank fraud, and you can go to jail. I don't know how they'll audit that, but they could. And they extended the audit period to 6 years. I don't know what it was before, but they can look back and audit you, and you're required to keep all this documentation for 6 years, a minimum of 6 years. I would keep it longer. there was something that was very controversial a few weeks ago that kind of scared us. It's a certifying that you need the funds, and they really stepped back on that, and they said if you are over, if you received a loan under $2 million, they're not going to basically, there was an automatic audit for people that receive, or business that receive over $2 million in funding. They really provided a lot more guidance on that and became a lot more, I don't want to say lenient, but they cleared that up and stopped the panic from ensuing.
They eased up on that a little bit.
To be clear, that was the audit on whether or not the economic injury was needed, like whether or not the loan was needed to begin with, correct?
Yeah.
Right.
And they can audit under $1 million. They can audit under $1 million up to 6 years. It's just not based off of that economic necessity.
Yes.
There's actually a really good question in here, Erin, if you get a second. I don't believe we actually know the answer yet. It's been kind of toyed around with, but Paige is asking whether it has to be restored over the full 8 weeks or by the end of it, or we've heard 630.
We're not sure.
Yeah.
What we're doing with our clients, whatever we can, is we're going by pay period. So if they're weekly, and let's say that the look back period they're using it was an average of 4 FTE, we are doing whatever we can to work with our clients to make sure that their weekly pay period has an average of 4 or more FTEs. It says restored by 630. I honestly don't know, because if you're doing an average, you're doing an average. You can't do an average in 630. It's like an average of what? I guess.
A lot of it sounds like they're basing it on the date of 630, what you have on that date. But yeah, what you're saying.
Deb just asked you to do a welcome back bonus for employees. Sure can, as of right now. I think that's what most employers are doing, actually.
I think only thing you'd want to do is keep it under that 15,385.
Yeah. So
that's all, Deb.
So what's next? You want to educate yourself. Continue to educate yourself. Don't just stick your head in the ground and say, I got the funds. I'm spending money. It's cool. You need to know what you're doing. Okay. Understand the compliance. Same idea. Tax. So again, this doesn't just affect right now. It will affect your taxes. It will. This will be a big deal actually this year. You have to do some extensive tax planning, especially if you're an owner. You just really gotta, especially an owner of an S corp or really a corporation.
This will be the hardest,
yes,
the most difficult year to tax plan, with everything that started with Trump's plan effective for 2018,
yes,
with the new QBI deduction, all of the new tax deductions for corps, depreciation, all of that stuff, everything that's hitting personal returns, and now this. Yeah. So it's going to be the most difficult year to tax plan.
Yeah, we always love your taxes. What I will say is I would not only have that packet, if you're doing this on your own and you're not working with us or your own tax preparer, that packet you submit to the bank, I would make copies or whatever and submit that to your accounting office as well. And anything you get from the bank, you should be submitting to your accountant because they need to know what's going on just as much as anybody else, if not more, because for obvious reasons.
And regardless of if you've tax plan normally or not, like most people typically will do it at some point in the fall, make sure you do it this year, regardless of what your income looks like. You need to figure out what things are going to look like when that tax return gets prepared and reported, because I still haven't wrapped my head around all of this yet, how that's going to affect tax returns. We haven't really dug into all of that yet. So it's going to be different than any other year that we've ever had.
So I would not wait till last minute to get your accounting stuff in. We always try to get people to bring in their stuff. We do our client stuff year round, but don't wait, because it's just going to end up, especially with tax planning. Yeah. So someone asked about, Serena asked about, can you give an example of how the EIDL affects the PPP forgiveness? Do we need to prove forgiveness on the full PPP amount and then subtract the amount we received for the EIDL advance, or do we subtract the EIDL advance from the PPP amount we received? It reduces the forgiveness. So if you got $100,000 loan, what?
I think the question, the way I interpreted it, Serena, you can tell me if I'm wrong, was whether or not you should plan off of the whole amount minus the EIDL grant? And that answer is no. You should plan the forgiveness over the entire amount. And then you're just going to end up with whatever you got for the grant is going to be a loan, but you can't take that amount off of your PPP and then plan for your 75%, because then you'll be under the numbers. Is that right, Erin?
My ADD kicked in and I wasn't really
I agree with you, Amber.
Yeah. Erin, what I was saying is that the EIDL, you can't just remove it and then plan on the balance of the funds. You need to plan on the entire PPP funds, and then just know at the end you're going to have a loan to pay back in the amount of the grant.
Yeah.
That's a very common question we've been getting. And if you planned off of the balance, your 75% number is going to be low and inaccurate.
Yes. So Debbie asked, are accounting fees included as PPP expense? No. However, what I do want to say is some people on here might be a medical, they provide medical type services, physical therapy, whatever. If you bill Medicare and you apply for the PPP loan, you most likely received an extra amount of a grant that's called the HHS. We honestly are not super versed in it. I have a colleague that's very versed in it. There's special requirements under that. There's a lot of different compliance. However, if you did receive that, I know that basically any costs associated with COVID-19, including accounting fees you paid for, are allowable under that grant that was received. Obviously, most people here that does not qualify under. However, again, if you are a company and you billed Medicare in 2019, you applied for this PPP loan, you probably received an extra grant amount. They're not small either. They're pretty large. Talking tens to hundreds of thousands of dollars. That is something else that you need to address, and I'm happy to help walk you through that and learn more about it. But anything COVID-related PPE, stuff like that are included.
They're going to update that. We were hoping to not having to bill, like we're billing for this work because it's substantial. Banks are making a pretty nice commission off all these loans, which nobody's really talking about. And I think it's a little unfair that they're able to capitalize on all this stuff and nobody else really is.
Yeah.
So you'll be able to deduct all your accounting fees on your return anyway, but it would be really nice to add that into the forgiveness somehow to reduce that burden.
I don't think that
whether or not they change that, I don't know. They usually leave accountants out of all these talks. So
Marie, to answer your question, say you got, the full 10 grand of the grant and you had 150 grand for your PPP loan, only 140 grand of that PPP loan will be forgivable.
Yes. So that's why I said, for an example, I received I received a couple thousand for ours. I just put it aside. I'm planning on not touching it. I don't want to use it because I'm just going to pay it back because I know it's just off the top. It won't be forgiven. So Marie, if you got $150,000 for the PPP loan and you received $10,000 for the EIDL advance / grant, let's say you were to be able to get maximum forgiveness, you're only going to have $140,000 that's forgiven. Let's say you got the $150,000 loan, PPP loan, and you only qualify for $130,000 of forgiveness. It's actually really only $120,000 you qualify for forgiveness because they're going to reduce that 10 grand off the 130.
Yeah, it's getting added back in.
That makes sense. So I received the money on April 20th, but we are not reopening until June 1st. I have left my employees on unemployment, but I will have a restored, Paige, you did a good job. I like that. I like what you did. But I will have a restored FTE count on June 1st. So can I spend the 75% on that 2 weeks of payroll for pay and bonuses and be forgiven? Yeah, that's actually a planning tool we've been using for some people because I didn't want people, but hopefully, and I'm going to read it right now, is stuff being discussed in legislation is, like I said, we think guidance is going to be issued later today. Hope. Why not put it out right before holiday weekend? We also think we really think there's a high chance they'll be extending the covered period to 12, 16, or 24 weeks. So that would be huge for you, Paige, because now the whole idea of this, we just had a call with someone yesterday. What's happening right now is people are just taking these funds and they have to spend it. So they're just literally throwing out money. They're just like, oh, brother, I need to put somebody on payroll. Here's money that they obviously never would have hired their brother in the first place. It's literally a waste. It doesn't help them because they're just desperate to get, make sure we get forgiveness. The idea is to use the funds for payroll for the future, to get yourself off the ground, to give you a good base so that when you're actually up and running, quote unquote, normally, you don't bleed yourself dry of cash. So hopefully they extend this. And obviously people that are already 4 or 5 weeks into this and spent half the funds, it sucks.
I'll say it again. They need to tie it to the states and when they open.
They do. And I think it would be a shame if they didn't allow people to go back and reapply for additional funds if they do extend it, and then forgive all the stuff that happened in the first 4 weeks that they had to just scramble around and pay. But what do I know about running a business? I don't know.
Yeah, we have somebody she spent over $40,000 already, pretty much for no reason.
Yes, and it's so stupid.
She could have been closed this entire time.
She's not stupid. It's what they did with this, and they just sit on their thumbs and just wait. We're hoping they also relax the 75% and 25% rules. There's been a lot of talk about eliminating it or relaxing it, which would be huge. And I think the reason why they're talking about it is the next thing is because they want to allow the borrowers to use the funds for PPE for employees and pay for adaptive investments needed to reopen safely, like a drive-through window if you're a restaurant, physical barriers. Like I'm assuming most offices are now going to have to put up those plastic thingies that you can't hear when you're on the other side, ventilation system upgrades, stuff like that. I don't know what you're going to do if you already spent half the funds and all you got was like 25,000. But I really hope they relax those. Technically, the 75% wasn't even a law to begin with. They just pulled it out of their butts.
Hopefully they take there's a lot of additional overhead costs that people now have to incur.
Of course.
Just dealing with all these new PPE regulations.
Yeah. I mean, we have a client that could easily put in a drive-through window. I think it's like 15 grand because he has to cut a hole in the side of his building, and I'm assuming do other things to it. And that's the only way he can survive. But how's he going to come with 15 grand? It's bonkers.
Yeah. Or if you need to buy gloves, masks, like whatever, all the stuff.
Daycares and schools are going to have the craziest, really insane measures. So who knows?
We'll see.
Okay, we're gonna do one more polling question. This is really, really important because if I could find it, we just really, really want people to not just think about right now. So what changes are you making to your business goals as a result of the current market? Are you just business as usual, trying to stay afloat, come with new creative ideas to replace income, or are you attempting to grow?
Yeah, so we've seen a lot of people try either. It's kind of been like a stark contrast, really. Like some people just staying put, continuing on, or they're kind of consolidating and shrinking a little bit at this time. We've got other people that are trying to expand. They're coming up with virtual courses, different types of services and products that they can do remotely, which they really could just continue on and expand that into different markets and stuff like that, so that you're not just stuck in your geographical area. So you can open up and do things. If you're doing stuff online, you can really, your marketplace is much bigger than just your local area. So it's good to think about trying to come up with new ideas.
21% of you said business as usual. 32 said trying to stay afloat. 16% coming with new ideas to replace income and attempting to grow is the largest, well, equal with staying afloat. So it's kind of nice you guys are attempting to grow. That's great. Yeah. So this is just the next topics are just really important to me because I think that business owners just in general just put their heads down every day and they just try to get by day and they don't think of the future. They don't plan anything. Basically, what is it? Failing to plan is planning to fail. And you have to think beyond the PPP loan and beyond whatever the next open date is. You have to be prepared to survive this and then thrive. So what's the point of being in business if you're just gonna struggle through this and then just go back to the way you were? Obviously, I'm not trying to knock anybody. I mean, I was in this position a year ago, but I made some drastic changes. But you're obviously in a pretty crappy position because you didn't plan for a type of disaster to happen. You didn't didn't put aside cash for this, you didn't cut expenses, you kind of just went along because the economy was great. I mean, we were actually kind of due for a recession anyways, not that this, I'm saying, this was, no one expected this, but you can't just put your head down and go back to this, put your head down and not think of the future. What's the point of being in business if you can't be profitable, if you don't have money at the end of the day, if you're killing yourself for nothing? So what are your plans after this? So you do want to survive to thrive. So so one of the most important things, can you answer these questions without looking them up? How much debt do you have personally in your business? These are things I want you to take away and think about this, because you can't just be thinking of getting through, like I said, the 8-week period and through June 15th or whatever it is. You have to think about these things. What was your taxable income in 2019? What was your gross income in 2019? What was your anticipated gross revenue for 2020? And what are your monthly operating and overhead expenses? If I had you on the phone right now and you couldn't tell me those answers to those questions off the top of your head, you really need to go back and take a look at what you're doing and really dive into your numbers in your business. Because if you can't answer those questions, that's actually a very bad problem to have. You need to know what your business is doing, what debt you have personally and in your business, what plans you have, your monthly operating and overhead expenses. You can't just continue to keep your head down. Huge, you have to budget. I know this is like old school mentality. It's the thing that will save your business. You have to budget. Have you created a budget for your business? And have you created one for you and your family? You need to think to yourself right now, never again will I be in this position ever again. If something were to happen 5 years from now that's similar to this, you do not want to be in this position. I'm assuming you guys like sleeping at night and you like having money and you like, not knocking 5 years off your life due to stress. So you have to think to yourself, never again. Why am I in business? Why do I do what I do? And you have to take your finances into your own hands. And unfortunately, it's never talked about personally or for your business. This is what people should be focusing on, not constantly reinvesting your money into the business. You actually have to set aside money, get rid of your debt, stop living beyond your means, and have a plan. So some things to consider to walk away with. Creating other sources of revenue streams or products in your business. Like we just said, this is not going away. Things will not go back to normal. If you're a restaurant, are you considering offering more family style take-home meals? I don't know, like maybe some catering type services. You have like some family events you could do. I don't know, stuff like that. Going through your expenses and cutting out anything that doesn't make you money or isn't necessary for the operations of your business. I can't tell you how much we see that clients, because we do their books every day, there's so much stuff in there and I'm like, why? And they probably have no idea that they have these things that are going through. What kind of cash flow are you anticipating? Yeah, you don't really know the future, but you really control more than you think. Where is your revenue coming? Do you actually know where your revenue is coming? Maybe you're selling a service or a product that is a high dollar product, but you're not actually making any money on it. You might be losing money on it. Where's your money going? So how much debt are you actually paying? Credit cards, expenses, like I said. All right, what are you doing about your debt? Do you just do minimum payments or maybe just like $200 a month? You have to pay off debt. You can't move forward with having tons of debt. You just have to get rid of it. Get rid of it. Okay, you need to create a budget and stick with it. You just have to do it. This is essential. People roll their eyes. Oh, it takes a long time. Yeah, it takes a long time. But sort of going out of business and losing all of your money and going bankrupt, really, it's not worth it, I don't think. And then make a plan to pay off your debt as quickly as possible. Live within your means. Kind of a novel topic here. And I think what's really coming out of this is that the savings rates and the debt payoff rates are skyrocketing right now compared to what they've always been. Okay, think about it. Live within your means. You really don't. If you can't afford it, if you put on a credit card, you do not need it. And really rethink what the American dream is actually costing you. Yes, maybe you want a riding lawnmower, but can you afford it? It's really, I know I'm kind of preaching and I sound like kind of crazy right now. I just can't tell you. I've done this the past year for ourselves. I mean, I was in the position too. It's kind of just how we do things. It's our culture. We just spend money. You open Facebook and there's ads directed at you. You have to rethink your business and you have to focus on what's really important. And having debt is not it. And not having a handle on your finances. If you don't know what you spend your money on every month, you have to know this, because what's the point?
Yeah.
Okay. So we're actually creating program. Not that this is not sales pitch at all. We realize it's a problem. We are creating programs for our clients, existing clients. You can expect to see some stuff coming out. If you're a monthly client, it will just be included. We're going to start helping you with this stuff. But I can't, I'm so passionate about it because this period is really, it's devastating to people. And if you actually had some savings set aside and you're not worried about astronomical debt payments, a lot of people could ride through this and be okay. So we are here to help with businesses and coaching advisory, especially through this. We've been on top of all this since literally day one. We have hosted webinars. We have one next week. Like it says, we'll have Amber posted the link to the webinar for you to register right away in the chat box. You can visit our website. You can reach out to our phone or our email. We have social media, Facebook, Instagram. We have our Facebook page, Straight Lines, what is it, Guide to Survival, Business Guide to Survival. And again, we have our webinar next week. We will have some resources. Again, we'll be emailing all this out. Please go ahead and make sure you add that at straightline.com to your safe sender so the stuff doesn't go to junk. It tends to a lot. I think a lot of stuff that says PPP and COVID are going to junk now. And then we can go to questions. If anybody has any.
Please feel free to raise your hand too. You just kind of click the little box next to your name if you want to talk and go through maybe your specific situation more.
And also, actually, if any of you want to tell me or you want to put in the Q&A or something like that, do you guys have any webinars you'd like to learn about? Maybe it's the stuff I just ranted about, went crazy about, because we are going to put those together, and a lot of those webinars will be free. If it's about the PPP stuff, anything like that, we just love to hear what you guys need help with. I really enjoy helping you guys and educating. I think somebody needs to help the small businesses, and we're here, so would love to.
I did also throw that, I threw all the links in there to all of our social media. Our Facebook group is in there, and a link to the next webinar. So if you go ahead and click on that, you can get registered right now. It'll go pretty in depth of each, piece of the application itself. And hopefully we have some more guidance by then too.
Hopefully. I can't see attendees, of course, right now. Anybody raise their hand now? All right. Well, if you are a current client and we are doing planning with you, and you fall in line with that 2019 thing, I'm assuming our team has reached out to you already this week. I'm pretty much everybody, right?
Yeah.
To discuss it. And we are thinking of some creative ways here to, if they stick with that or they don't extend the 8-week period. I've kind of come up. I am personally really, Jake and I are really hit by this actually. So I'm even not that it helped, but I'm also extremely motivated to try to think of creative ways to help it. So we're going to do whatever we can to get maximum forgiveness and really help everybody out with that. Could totally set you up as a client, Marie. Happy to. Yeah, Marie, if you actually, what time is it? I actually have some time. I have a 2:30 meeting, but if you call like at 1:30, I just need to eat something really quick, but maybe 1:45, you want to give the office a call. I can have time to chat with you. I just went off the seat of my pants into the meeting. All right, well, it looks like everybody's logging off, so we really appreciate you guys attending. Please spread the word about the webinar we have next week. It'll be very exciting walkthrough of the application, but I think it's going to be really important because it's so confusing. I mean, I've read it, like I can't even tell you how many times, and I'm still confused.
Hopefully it doesn't change over the weekend, but we'll see what happens.
It will. No, I hope it does actually. But thank you guys. We really appreciate it. We hope to see you guys soon, and enjoy this weekend. I don't know where you guys are, but it's gorgeous here in Massachusetts. Enjoy your Memorial Day weekend. I hope you can at least, I don't know, be outside.
Make sure you social distance. Thank you guys for your time.
Thank you. I'm going to figure out how to end this in a second. All right. All right, I'm ending.